Okay, recording this video after close trade Wednesday, 6th of January 2016. Hope you had a good day's trading today. So, going to talk about two things in this video, trying to make it a short video. First of all, we had a nice little long setup for a day trade this morning. So just going to talk you through that. And then Japanese yen, that was kind of the most interesting thing that I saw on my chart today. I want to talk about the yen carry trade. Everybody's talking about crude and gold today, but for my money, the yen carry trade was kind of interesting, so I'll show you what I'm seeing on my charts. Anyway, so let's start with the 1500 tip bar chart. This is today's open, and the setup for the day's day trade was really a result of what happened overnight. And this is the close on the Tuesday, and this is the open on Wednesday. We were waiting for FOMC minutes to come out in the afternoon, but there was a nice little kind of rally that we had first thing in the morning. The overnight session dominated by this decline, which was 40 points, really set off by what was happening in China. And so we had real weakness, a bit of a waterfall decline overnight into the open. But coming into the open, we had a bunch of things kind of going on. We had exhaustion sell kind of going on here. We hit it a couple of times, bang, bang. And then bullish divergence kind of comes in. So at the open, we had a little bit of strength. But the downtrend is not over until we see exhaustion selling. The exhaustion selling that we have in the overnight session is usually not enough. We need the full liquidity of the day. We need everybody to be at their desks, waiting for that exhaustion sell to really kind of mark the bottom. And it wasn't until we saw that today's activity kind of bottomed out, and that was the exhaustion sell that we saw at the after the Fed minutes kind of came out. So we're going to have a little bit of a reaction rally after that exhaustion sell kind of pre-open, and you can see that this one was characterized by a whole bunch of batting backwards and forwards between cyclical resistance and support, and that is a complex correction. When we don't have a decent kind of trending break above a resistance into a pullback to end of trend type situation, that's what we have, we call a complex reaction, kind of going all the way back up. And it wasn't over until we had exhaustion buy and bearish divergence kind of come in. We had to tap it a couple of times. So we had it first, you can see all the blue professional bars coming into that high, and then the bearish divergence kind of comes in. Here are the amateurs getting excited a little bit too early. We tap it a second time, just go through those highs, kind of get everybody kind of pushed out of their moves, and then a third time here, a second time up here, we test a whole bunch of blue professional bars again with those exhaustion buys. We test with a bearish divergence and then a flush pattern, and then we drop off into that trend move on the way down, where we kind of test the lows from overnight. So we're having a reaction rally kind of first thing in the morning. That's why I kind of jumped on board this kind of strength and just took out a one shot, one kill. First trade for the year for me, so just looking for 4 points. Quite happy to be in and out. I'll tell you what, so I'm in Sydney at the moment, and the open for me now is at 1:30 a.m., which is a killer. When I'm trading the winter in Australia, which is kind of the summertime in the US, the open, because of daylight savings and all that kind of stuff with the different sides of the globe, the open is at 11:30 p.m. That's not too bad. I can deal with that. Well, 1:30 a.m. it's an absolute killer. So anyway, it is what it is. You got to do what you can do. Just going to show you what these signals were showing on the multiple time frame kind of indicators. First of all, this is where the open was for the day. So there's the open kind of there, and we got this big decline ending up with exhaustion sell and bullish divergence, and we get strength kind of coming in here. We get a little low risk entry point, which is this little thing here, and then as soon as we start breaking above the 2 time frames, you can see the trending system kind of comes in, showing us a bullish pattern here. But this wasn't over until we saw pullback to end of trend on the highest time frame, and that exhaustion buy kind of going on here. So that was the reason to be bullish into this morning move, and it wasn't over until we saw the FOMC minutes kind of released, and then we could kind of start going the other way. So remember, it is not over until we see exhaustion sell on the downside. If you see exhaustion sells during the overnight session, that is not enough to bottom out a market. These exhaustion sell patterns here were not enough to bottom that out. We have to see that during the full liquidity of the day, where we tested those lows and see them all again. So now the question is, we've bounced off 1970. Is that enough to save us on the way down and put in a bottom and rally from here on? Because we've not played out this nice kind of seasonal strength at the beginning of the year. We've had 3 pretty nasty days on the way down. And I don't know the answer, but I can tell you the thing that I would be looking for in my charts is exhaustion sell on the higher time frames, and we haven't seen it yet. So this is the 4500 tip bar chart with the multiple time frames. This is going all the way up through 13,000 and through 40,500 tip bar chart, and this is the downtrend that we've had. Let me just show you. This is Wednesday's trade, Tuesday's trade, Monday's trade, and this is the big downtrend that we kind of broken into with pullback to end of trend, and we've tested it with a second cyclical turn at 1970 kind of down here. You can see that's one of these big solid highest time frame cyclical supports kind of going on here. Got a little bit of strength that we kind of broken into for the time being. Today's activity was basically bouncing off that support, resistance, support. Question is 1970 going to hold? Is that enough on the way down? And what I would be looking for is exhaustion sell on the downside. And if you look at better momentum here on those higher time frames, we've not had it. We've got like a short covering rally going on here with Monday's activity, and then we had flush patterns which led into the overnight activity. That's out of China, bang, hitting it on the way down, and this rally on the way back has exhaustion buy kind of going on. Now, the last exhaustion sell signal that we had was really getting this move going, kind of here breaking through this support, kind of going on the way down, and we've not had it there. So I don't know, if we break through 1970 again, it'll be set off by weakness out of China. If we break through 1970, then that would start to bring in some exhaustion sell signals. So far we've not had that, so maybe we're going to have a little bit of strength, a little bit of rally, and then kind of test down again. All I know is 1970 is an absolute key level, so kind of look out for that. And what we're doing is basically triggering the yen carry trade. So what is happening is we've got strength in the yen going on here. So yen carry trade, the yen is a very cheap currency to borrow in. So you borrow in yen and then you buy higher risk assets, equities, equity indices kind of around the world, maybe some bond plays where you've got kind of more higher yields kind of available around the world. But your exposure is in Japanese yen. So if the equities market starts to decline, you're under pressure, and then if the Japanese yen goes against you, if the yen starts to strengthen, you got a double whammy. You've got your markets kind of going against you, plus the currency going against you, and all of a sudden you start to trigger margin trades out of Japan, and people have to repatriate their funds into Japanese yen closeout positions, and so you see weakness in risk markets like the equities markets and strength in the Japanese yen. And I usually show that with this momentum divergence type indicator here, where we've got the SPY, which is the ETF for the equities market, going on here, and then we've got FXY, which is the ETF for the Japanese yen. I can plot both of these on the same chart, because TradeStation has a restriction being able to plot things in the same kind of time zones on the same chart, and calculate some divergence between what's going on with equities and the yen. So we get situations where we have little blips up in the yen and the equities markets kind of falling off, and that kind of generates these kind of positive divergence. And then on the flip side we get the reverse. We get weakness in the Japanese yen here and the equities market strengthening, and we get kind of overbought situation. So oversold, overbought. Now we started to trigger some oversold type conditions here because the yen is strengthening and the equities is declining, and so that will potentially hold. Question is, are we going to have to generate quite a few of these before this whole situation kind of holds and we get a proper rally generated from that, or is that enough? Is just a couple of bars enough, and then we get some strength in the equities and the yen starts to decline again, or we're going to have to see some more declines in the equity market? So that's what I'm looking at. Who knows what the answer is, but the yen is starting to strengthen here. If I look at this on my multiple time frames indicator, The reason why I'm interested in this is we got a left shoulder with a whole bunch of exhaustion, sell, and bullish divergence patterns kind of coming in on better momentum, and a flush pattern down here. We've made a whole bunch of pullback to end of trend signals on the lowest time frames, on the intermediate time frames, on the lowest time frame again, and then we're starting to show some strength. We're breaking through resistance. Pullback to end of trends has not played out. You know, they played out earlier on in this game, but they are not playing out at the moment. They're kind of breaking above those situations. And what's interesting for me is these big blue professional bars. So this was back in September, and that was a short covering rally. We had exhaustion by bearish divergence and we fell off, but the last big blue professional spiky bar was this one. And we've kind of played up above that one. A couple of days ago on the Monday, we had a big blue, another blue professional spiky bar, and we're closing above that. So we could all of a sudden start to trigger some more exhaustion buy kind of activity as this yen carry trade gets triggered. So further weakness in risk assets and strength in the Japanese yen, and all of a sudden we get a little bit of a rally in the Japanese yen, and we have continued weakness in equities. So we'll see. 1970 is the absolute kind of key level here that we got on equities. So let's see. At the moment we've got a little bit of strength. We bounced off those FOMC minutes, but if we come through 1970 again, it could get interesting on the downside. Just to quickly show you what was going on with the crude and some of the crude kind of currencies. Again, we're in this mega downtrend on crude, having topped out at 110, 120. We're continuing to break through. We've got these exhaustion patterns kind of going on, but we've got to see pullback to end of trend on at least on that daily time frame before it's over. And so as a result of that, we've got continued weakness in the commodity currencies. So we've got the Canadian dollar here continuing to break down. We're down at 70s on that. Aussie dollars continuing to break down. We're at 70s on that as well. And then I talked the other day about British pound, you know, this 145 level that we kind of bounced off last time. We're in downtrends. We're coming up to that level again. That'll trigger some fireworks on the British pound. So there we go. That's what I'm looking at on my charts. Hope your trading is going well. I'll tag on that little day trade just to show you what I was thinking at the open today. Okay, just gone long 78.75, long 78.75. Checking stops and targets. And reason for going long, I'm just going to make an initial push up, and then we've got to come down and test. We've still got to go pull back and return on the 4500 tip bar chart. But quite a night. This was the close yesterday, Tuesday, and then we just sell off into exhaustion sell signals, bullish divergence signals kind of come in. Bunch of blue professional bars here. This testing down was really good. Amateur down bars here, and then we've kind of been fighting our way up above there. A little blue professional bar comes in. Here we go. This is good. I'm just going to keep my target at 82.75 just because we have to put in this energy pullback and a trend on 45. So it was a little gathering pre-open, not unusual. And we just kind of got going. So this has got to finish up, most likely pull back end of trend on the 500 tip bar chart, which syncs up with cyclical resistance on this highest time frame. On the multiple time frames, that's just amateur down bars, testing there, back into towards my entry at least. There we go, blue professional bar takes it up. Come on, keep on breaking up. Here's the system. This is close. Broke into a big downtrend, so you can see we've got on the highest time frame this big support that we got to make pull back to end of trend, and probably do that with a little trending pattern on the lowest time frame. So we start to get interesting as soon as we've got exhaustion by bullish divergence. There we go, and now we start to show strength. That's our low risk entry point. That was down there. Waited for confirmation, get a break. And now we're just running up. There you can see those blue professional bars here, amateur down bar here, and now we're breaking up. Well, there's the resistance coming pullback on the 4500 tip bar chart, and I probably should have jumped up around that because that came in with pullback end of trend, but there's no blue professional bars on 1500. So, and I was just waiting just for a push through. Okay, here we go. Alright, we're getting it now. But it's amateur up bars, it's weak, so let's see if we get a blue professional bar up there for a reversal. But so far I'm just looking for that breakthrough with just technical resistance at a previous high. Come on. No blue professional bars this way. This one stepped in at the bottom here, which is reasonably significant. So let's just pop through, take me out, and then it might go kind of test down. Bingo! Just taken out. 82.75 for 4. Excellent. One shot, one kill. That's nice. And first trade for the new year for me. So it's a nice one. Now, here's the exhaustion pattern again. Blue professional bars. There we go. Bingo. That's the one. Blue professional bar on 1500. That was not going to be the top until we put that in, but that was a bit of a scary kind of sell-off there. It's a Rambo pattern on 45, so we could easily, cyclical resistance maybe come in, that thing kind of just weaken and go test down, pull back in a trend, and have an exhaustion pattern during the full liquidity of the day. I say with these things on the 1500, I like them to happen for reversals if we get confirmation during the full liquidity of the day, so it might kind of go and do that. In terms of the trending system, there we go. Low risk entry point. Bang, kind of plays out. There's no weakness yet. We've had one little end of trend here. We've got resistance here, kind of coming in. And there we go. There's more blue professional bars kind of coming in there. That's all of those. Well, there's more to be had, but that was a little bit of a roller coaster with the sell-off, so I'm quite happy with that.